A total currency collapse, a soaring stock market, 1,500% annual inflation, multiple bailouts, political revolutions every 5 years, and a bold politician with a chainsaw and a prescription of shock therapy. Here is a look at Argentina. So, to really drive the point home about the unit of account, the denominator, why it matters so much, hopefully Argentina will do that. There's some mind blowing slides in here that show just how much the denominator really matters. Here is one of them. So here is the Argentinian peso denominated in gold. Remember, this is just the inverse of the gold price denominated in pesos, which, by the way, if we just go back to 2022, this is up about 6,000%. So again, what that means, gold is not getting more valuable. The underlying currency, the underlying denominator, the unit of account, the peso, is getting that much weaker. And to just further drive this point home, a lot of people are talking about the valuations of various U.S. stocks, whether it be individual stocks or the broader market. And it's important to point out that, if you look at the price to sales, for example, of the S&P 500, it is 3.3 times. Now, that is historically quite high. However, if the denominator is failing, as we see in some countries like Turkey or here in Argentina, it can always get worse. Now, the IAB, by the way, is the Argentinian stock market, their version of the S&P 500, their major stock index. And then, of course, the price of gold denominated in pesos. It just gets more and more parabolic. You look at the chart of the S&P 500 or the NASDAQ, it is just an absolute parabola. And it looks like it can't get any crazier. But the point of this particular slide is to indicate it can always get more parabolic. It can always get more vertical, as we are seeing here. If the underlying unit of account, the denominator, is failing and the purchasing power of each peso is going down, then yes, the price of various scarce assets like housing or stocks or gold will go up. It is not that these got more valuable. It is that the underlying unit purchases that much less. The purchasing power of the peso went down that much. Now, of course, recently, the Argentinian stock market has declined 42%. It is the worst performing stock market in the world. And here we will zoom in on that. We can see it's down 42%. Now, also worth mentioning, their currency, the Argentinian peso, is also down significantly over the past year and a half or so. So to zoom out and get kind of a broad overview on the structure of their economy, it's quite different from, say, the US or most Western economies. Here we can see various GDP components. Now, Javier Milei was elected November 19, 2023. Government spending, as we can see, is a major contributor to GDP, a major component of the overall Argentinian economy. He came in with a vow to cut that government spending. And we'll take a look at the fiscal balance and the current account and those various things in a second. But that was really Javier Milei's major goal. Now, in general, though, Argentina runs actually quite healthy trade surplus. They export more value than they consume. As we can see, for example, agriculture is a pretty significant component of Argentina's economy. And here we can see exports in US dollar terms. So again, adjusting for the underlying currency collapse, you can see that even doing that, even looking at it in dollar terms, using a more healthy denominator, they are running very, very strong exports, near record high in terms of exports, even in dollar terms. Now, down here in red, we see the trade balance. Remember, the trade balance is one of two main contributing factors to the current account. The current account is really what matters. Even though Argentina runs a very large trade surplus, because of all of their debt, all of the interest that they have to pay to foreigners, right? Capital that is leaving Argentina, that is obligated to go to the rest of the world, to the people that own the Argentinian debt, to service the debt, to pay the interest on that debt. Primary income, which is one of the components of the current account, is massively negative and drags down their current account, which is, again, really what matters. The trade balance is, of course, important, but it is just one of many factors that go into the current account, which is really what matters. So here is external debt. This is debt owned by people not living in Argentina in dollar terms and in peso terms. This is the same underlying data. It is just changing the denominator from dollars to pesos. So hopefully, the point about the denominator will become more and more clear as we go through this. So here's the current account, both in dollar terms and a share of GDP. And what we can see is, again, despite very, very strong exports, despite a trade surplus, Argentina runs a current account deficit, generally speaking, over the recent history, if we go back to the 1980s. And what this means, again, is that this is placing an increased burden on the country. More capital must flee. Must leave the country, must flow out of the country to the rest of the world than is flowing in. That is generally what the current account is representing. Now, of course, current account deficit does get offset by capital inflows. The balance of payments must always balance. But I think the easiest way to think about the current account, for example, we buy $150 billion more of goods than we sell goods and services. Per month, the U.S. buys $150 billion more of goods and services from the rest of the world than they buy from us. Well, what that means is we have to come up with a way to finance that. Well, the way that we have financed that, at least in the U.S., is by selling, say, China. They can buy U.S. Treasuries at negative real rates. They can buy NVIDIA at a 38 price to earnings ratio. Of course, every current account deficit is balanced by a mirror image in terms of that capital and financial account, foreign direct investment, portfolio investment. But in general, the way to think about the current account is as a share of GDP. We can see it is just ticked positive. But in general, despite strong exports and a trade surplus, due to that primary income, which again is on the debt, it is interest on the debt, capital that must leave Argentina. The Argentina is obligated to pay out to the rest of the world because of that primary income draw or negative. Their current account, as we can see, is negative, generally speaking, as a share of GDP, putting more stress on the finances of the government. Here, we're starting to include the government budget. Now, it's important to point out here at the peak, the government budget, the difference between government spending and government revenue, reached 8.3% of GDP. Now, right now in the US, the fiscal deficit is about 7% of GDP. This is insane, even for the US, which is the global reserve currency issuer of the world. Argentina, of course, is not, which makes something like an 8.3% fiscal deficit even more crazy. Now, here, again, to really illustrate the point of the denominator, why it matters so much, here is the fiscal balance in peso terms. So again, going back here, we can see that it is just ticked into a slight budget surplus, meaning that the government is collecting more revenue than they are spending. So here is that in peso terms. So we can see 12.6 trillion pesos. But again, the denominator really, really matters. So once we adjust for the loss of purchasing power of the underlying unit of account, which is, as we were looking at before, which was the peso, here we're looking at the fiscal deficit in dollar terms. So again, adjusting for the loss of purchasing power, the weakness in the currency, we can see it is only about 10.8 billion US dollars. Is a much different story. I mean, the trillions of pesos, running a 13 trillion peso surplus might have been a heads up there that you need to look at the denominator. You need to look at the unit of account. So here's the fiscal deficit as a share of GDP, which is really the way to look at it. And we can see that it is a slight surplus. However, going back to 2014, which is the only data I have through TradingView for the fiscal balance, we can see it was deeply negative. Their fiscal deficit was quite large. In fact, 5, 6, 7% at times. This, again, when you couple it with the current account deficit, just puts an immense burden financially on the country of Argentina. So, of course, when you talk about that kind of fiscal drag or a fiscal deficit, we just talked about this with the UK video. A lot of people think we'll just raise taxes. So we showed in the UK video that, in fact, over the past 2 or 3 years, their tax revenue as a share of GDP has actually declined. So they've raised their tax rates and actually gotten less revenue as a share of GDP. Remember, taxing, the way it works, you want higher GDP. Because as a government, that GDP is the economic activity that you can siphon some cash or value or wealth off of. So you need GDP to be high, and that'll increase your tax revenue. So this is why tax revenue has to be looked at not in nominal terms, which is how we're looking at it here. We'll look at it in GDP terms in a second, but as a share of GDP. In the UK, over the past couple of years, they have raised taxes, but yet gotten less tax revenue as a share of GDP. Now, the income tax rate for individuals has stayed constant going back to 2013. The sales tax rate has also stayed constant going back to 2013. However, they did raise their corporate tax rate here back in 2021. And what we can see, it went from about 30%, by the way, to 35%. Well, ever since they raised that tax rate, you can see that in dollar terms, their revenue has actually gone down. Now, we'll take a look in GDP terms in a second here. So here we're looking at revenue as a share of GDP. Here's that corporate tax hike that we can see. By the way, here is nominal government revenue, 136 trillion pesos, and yet it is just an ever so slight surplus. That tells you the currency. There's an issue with the denominator. Here we can see that revenue as a share of GDP from the time that they hiked taxes went from 31% of GDP, which is quite healthy, down to just 17% of GDP. And not only that, but it killed real GDP growth. So this is kind of the issue that various Western governments that are heavily indebted, this is the issue that they're going to run into, is you can't just tax your way out of it because number one, those taxes constrain growth. You need growth because growth is the entire engine for your revenue streams. And not only that, but depending on the country and the laws and wealth exit taxes and various things that do differ from country to country. Generally speaking, people can just take their money and flee. Now they can't take their business necessarily, although they can always transfer it to some LLC in the Cayman Islands. There are ways, if you are wealthy, to get around taxes. And so not only does it constrain growth and therefore hurt your revenue and actually make the deficit worse, but as we can see, it actually decreases revenue as a share of GDP. And again, this is the case across the board. When you're looking at the data, what the data actually says, whether it's the UK, Argentina, it doesn't really matter the country. Every single example of tax hikes, significant tax hikes of countries that are in fiscal distress, every single time revenue as a share of GDP declines. So again, it is difficult for governments. This is a headwind for governments because it's not as simple as just, well, raise taxes. In fact, taxes not only hurt the growth that you need as the government to generate the wealth that you then tax. So you need growth, which gets hurt by higher tax rates, but then you also actually end up decreasing revenue as a share of GDP. So it makes it quite difficult to actually counter a fiscal deficit, or in the case of Argentina, a twin deficit, although it has slightly improved over the past year or so. Both the current account and the fiscal balance are both slightly positive, indicating some degree of improvement over their twin deficit. So, of course, it's also worth mentioning when we're talking about Argentina, they have very, very high inflation. Right now, their overnight interest rate, right now for the Fed, it's about 4%. Well, their overnight interest rate is 45%, and their annual inflation is running at 33%. Now, at the peak here in 2024, their annual inflation was running 292% per year. And I'd mentioned 1,500% inflation. Here is that. It was back in the late 80s. We can see the inflation rate here in red went as high as 16,000. So the degree of inflation that Argentina has had, not just recently, but in overall throughout their history, they have dealt with this many times. They've been through many kind of fiscal crises. This is not necessarily a new phenomenon. Now, why is it happening? Well, here is the 12-month rate of change, or the rate of growth in the underlying money supply. That is shown in red. And then, of course, we see the inflation rate in white. The inflation rate here peaked again at about 300% annual inflation, and the rate of M2 at the peak, M2 was growing at about 200% per year. So that would be like US M2 going to, I don't know, 115 trillion, something like that. So the degree to which money printing was going on in Argentina really cannot be understated. Here, of course, in peso terms, is the Argentinian M2, and I will put it in logarithmic form. even in logarithmic form, it started to go parabolic. So remember, logarithmic form axis here is adjusting for exponential factors. Even in logarithmic form, their money supply was starting to go parabolic. That is when you know things are getting really, really crazy. So here is FX reserves. Now, remember, this is what, when we talk about, say, Japan or China, these price insensitive bidders of US debt, primary, creditors to the US who are buying our debt, and how it differs from, say, the UK, who runs a very, very large twin deficit, a price insensitive bidder like China or Japan that run a healthy current account surplus, a trade surplus. They are quite different from each other. Well, again, we've mentioned foreign exchange reserves. Here is a look at Argentina's foreign exchange reserves. And the point here is that, generally speaking, when you're running a current account deficit, again, you have to finance that somehow. Well, foreign exchange reserves are basically national savings that are accumulated via current account surpluses. As we can see here, from, say, 2002 all the way through here, Argentina was running a current account surplus, meaning more value was flowing into their country than was flowing out, at least on the current account side. What that meant is that they were able to accumulate national savings. Now, of course, I made a note here with some notes on the FX reserve position and how it relates to the current account, how it relates to international capital flows, and, of course, debt, and all of those things. If you would like to pause it and read that slide there, here is a look at GDP. So the question, we have one more slide to go with the bond market. The question of, is Malay working? What is going on? What was it successful? Well, here's GDP, the annual rate of growth for GDP, and then, of course, the annual inflation rate. I had to put them on two different axes because otherwise you could barely see GDP. Again, inflation is running at 39%. So inflation is even still a major problem. Yes, it has come down massively from 300%, but it is still a significant issue for them. And of course, their central bank interest rate is a component, as we will see with the yield curve in a second, trying to tamp down and continue that disinflation that they have seen going back to 2024, where, again, inflation peaked at 300%. So yes, they are kind of winning the war to some degree, at least, on inflation. Slow and steady, I guess, wins the race. And when it comes to GDP or growth, again, this is inflation adjusted growth. We can see it actually just has reaccelerated over the past couple quarters. So if we go back to, say, November of 2024, so just about 10, 11 months ago, we can see that GDP was just basically 0%. It wasn't the economy wasn't growing, it wasn't contracting, it was just basically stagnant. And over the past 10, 11 months, couple quarters, we have seen GDP just rip higher. So they right now have 6.4% GDP growth. This is quite strong. I mean, when you compare, for example, to the US, real GDP here in the US is about half of the rate that real GDP is for Argentina. So their economy is growing about twice as fast as the U.S. economy. However, all the issues that we outlined with the current account, with the currency, with the debt, and the primary income drag from interest payments, all those various factors are still very much at play that the U.S. does not, of course, suffer from nearly as much. Down here, we see unemployment, and the note about the labor market is unemployment, again, has kind of been ticking up for them, 7.6% for their headline unemployment rate, and it is worse for certain populations like the youth. So here is the yield curve. They do not have yields for Argentinian bonds in TradingView, unfortunately. So here we're looking at the US dollar price of various bonds. And of course, if you have TradingView, it's quite difficult to actually pull up versus, say, the US or Great Britain or France or Germany or China or Japan. It's quite difficult to get bond market information for Argentina, but this is what we were able to get. These are US dollar prices of the bond market, which, as you can see, have absolutely plummeted over the past month or so. You have seen a massive sell-off in the bond market. Now, how we're looking at it here are the yields or the equivalent yields according to a couple different AI models that I consulted to try to get an approximate yield for each of these maturities. You can see that here. What the lines are showing in the scale over here is the percent of par value. So if you assume $100, for every $1 you invest, you're getting $1 back. It is 100% of par. We can see that most maturities, at least from the 4 year all the way out through the 21 year, are trading at basically 40 or 50 cents on the dollar. So their debt is trading at a massive, massive discount, and it translates to these yields that we are seeing here. Now, what has happened over the past month or so is what is known as a bear flattener. This is where, in general, rates are coming down, and they're coming down the most quickly at the short end of the yield curve. So, just what happened here in Argentina is that they had a local election, I believe, where Malay's party, the current prime minister, the current president that was coming in to cut spending, his party or his group lost a significant number of seats. They are becoming quite unpopular due to the austerity measures. Their party lost and performed quite poorly. So, what is happening in the bond market? Again, remember the yield is inverse to the price. So, here we're looking at maybe what the yield curve would look like if we had data for the yields. Yields are up. And again, that's because the underlying bond is selling off quite sharply, only about 50 cents on the dollar for government bonds in Argentina, again, equating to yields above 10%. And again, what we have seen is what's called a bear flattener. What this means is that short-term yields are increasing more sharply, or looking at the bond price, are selling off more sharply. And this is due to the kind of concern that if Malay's party, the Fiscal Responsibility Party, is losing ground, well, then they're going to return to profligate government spending, where and money printing and inflation, and therefore, of course, they are demanding a higher premium. So it is due to those fears that you see the bond market selling off quite significantly. And these were, I think, midterm elections. But longer dated maturities are showing a bit of kind of healthy moderation, where they're going. The bond market seems to think that in the long term everything might work out, but at least in the short term, these bonds are selling off. And again, remember, that means that the yield is shooting higher. And that is on concerns of, a return to kind of profligate spending. The yield curve actually is a bit inverted, meaning you actually get higher rates at the short end of the yield curve, as we can see here. You are getting more interest to take less duration risk. And again, this is called an inverted yield curve. And generally, the bond market appears to be not quite so worried about the long term fiscal health of Argentina, but is quite worried about the short term kind of political reality for Argentina. So, anyways, hopefully that video was helpful, and I will catch you on the next